How to never get denied for a loan again.
You know what? It's a lot of things that we don't know as a community that we need to know. Turn that penny into a 5.3. You want to learn how to make your money work hard for you rather than working hard for money? I want you to be there. Tune in. Hey, it's me again, and I am here with my girl. Oh, there you are. Now, understanding simple concepts. I'm glad I have your attention. Why? Because I didn't understand a lot of the concepts before realizing that the concepts that create wealth, when I saw that, I said, hey, let me look a little deeper. So, understanding that you are taking control of your financial future. You are in control of your banking system when it comes to your finances. Now, when you can take control of your financial functions, you actually become the CEO of your own bank. When you take control of your financial functions, you actually can earn your own interest and your dividends. When you take control of your financial functions, that's real power. That's where real power comes from, in understanding the insurance cash flow concept. The policies. The power is in the policies. Now, there's two sources of income. That's either you at work or your money at work. Now, as a CEO, you have power, right? The policy of ownership, taking control over your life, the benefits, not just tax-free benefits, but the benefits of having power when it comes to your financial future, the forecast. This is some powerful stuff in here. I'm glad I was reading. And as I read one thing when it comes to understanding our power, that we have the power to continue to pass this on through generations and generations and generations. So if I ask you, are you living off your grandfather's or your grandmother's wealth? So if your answer is no, this is some information that you might want to listen a little closer to. Continue the generational legacy through the insurance flow concept. We're going to learn so much together. That's my acronym of TEAM. Together, everyone achieves miracles. I think big, I dream big, and the same concepts are there for you because we're talking about it now. And we're going to apply simple concepts and put them into action. Because only what we do, we understand. The better it gets, the better it gets. I'll make sure I share some of these concepts with you. And I'll be back.
What if there was a strategy that would allow you to not only save for your retirement, but also provide access to capital along the way for you to be able to make the major purchases you will face without having to drain the tank? If there were a more efficient cash flow model than what you're using today that could help you make major capital purchases without going into debt, without resetting compound interest on your money, reduce your risk, reduce your tax liability, give you more control of your money, and help you minimize or avoid future losses, would you want to know about it? In this video, we have given you a solid way to approach your personal cash flow. It's not product you buy, but rather a way of doing what you're already doing more efficiently. Call us to schedule an opportunity.
I believe in a simple concept, and it worked for me, and it'll work for you as well. The insurance cash flow concept.
Efficiency, The private reserve account can be any account you want to use. While you will want to find an account that gives you the greatest number of benefits, the one benefit that the account you choose must have is that your money must be available through collateralization. When looking for a vehicle to serve as your private reserve account, you're going to want to look for an account that has characteristics and benefits that meet your needs. Well, let's talk about some of those. One of the things you're really going to want is tax-deferred growth on your money. Compounding interest in a taxable account is not going to serve you very well. Tax-free distribution would be awesome to be able to get the money out without paying taxes. You would like to get a competitive rate of return during the accumulation phase when you're putting the money in the tank. You would like to put in as much as you want, thus having high contribution limits. Deductible contributions would be preferred. Collateralization opportunities is key. Remember, if the account you're thinking about will not allow you to collateralize, thus forcing you to drain the tank, that account will not function well as your private reserve. A safe harbor. You want the money in an account that's safe. You would prefer no loss provisions, meaning you can't lose this money. You would also want guaranteed loan options. If you're going to collateralize loans from time to time, you're going to want to be able to do it at your discretion with guaranteed access. Unstructured loan payments would be preferred, meaning you do want to pay the money back, but you're not under any obligation to do so on a set and rigid schedule, thus eliminating the pressure of forced payments. You would want liquidity, use, and control of the money at all times. And then finally, additional benefits like creditor proof, meaning your account is protected in the event of a lawsuit. While many accounts will work as a private reserve, there are some that will work better than others. In addition to the ability to collateralize, the private reserve account must also be safe, meaning the money you put in this account cannot be lost. The private reserve account would not necessarily be an account to replace your investment accounts, although it can also help you be more efficient in that area as well, but rather an accumulation account in addition to your investment holdings. Let's recap. We finance everything we buy. We want our money to earn compound interest without interruption, meaning we never want to drain the tank, and collateralizing our major purchases is a more efficient purchasing strategy than going into debt or paying cash. To learn how you can employ the private reserve strategy and have your money compounding interest while you still have access to it, give us a call and schedule an appointment today.
So I guess you're wondering, what are concepts? Concepts are general notions. A plan of intention is a conception. These are simple concepts that you will learn with the insurance cash flow concept. So why is it important that we understand that we are looking at concepts and not products? I'm not selling you anything. This is about understanding a simple concept to create wealth. The penny concept. Did you know if you took 1 cent, 1 penny, and let that penny double over 30 days, you will realize over $5.3 million? A simple concept, right? Wouldn't you want to know how to accumulate that type of wealth in this lifetime? But not only to accumulate it for yourself, but to pass it down through the generations. The money growth concept. How you can take your regular hard-earned linear exchange of dollars for hours, because that's a concept of linear pay, and we are 99% of the time are most exposed to dollar for hours, dollar for hours. Very rarely do we understand what residual income is all about, but this is not about residual income. This is about your money growing through a concept. So getting that concept is critical to knowledge, and that knowledge is learning the simple concepts. The bank concept. What is a bank? It's an institution where you put your money. So if you now can find a permanent resident for your money to just continue to grow on a compounding concept, wouldn't you want to know more information about that? Of course you would. Who wouldn't, right? So the approval concept, understanding a plan of intention. The approval concept is regardless of your credit. It doesn't matter what your credit score looks like. Now, I'm not saying you shouldn't have great credit, but when it comes to loans, credit is not a necessity. So I would want to know more about this guaranteed approval concept as well, too. What about a car? or home. This is a loan concept. So let's example the cars in our lives, regardless if it's from $10,000 to $50,000, whatever your desires are, it's up to you to understand how the concept of taking out loans really works. So if I take out a $10,000 loan, if I take out a $50,000 loan, I'm able to now pay myself back rather than giving money back to the banking institutions. Okay? They're designed to give you loans. Why? Because they think you don't know any better. You haven't been able to save money, so surely you're going to need a loan from somewhere. Well, guess what? What if I told you you can take out your own loans? You can actually take out money against the collateral that you have saved, because if you're still exchanging dollar for hours over the course of a lifetime, you have given away millions of dollars. That money can be compounding just through a simple concept. Understanding concepts are greatly advantageous to you. So, what about the paycheck concept? Okay? Now, if you're getting a paycheck and you're taking that money to pay bills, then why would you not pay yourself into a system and the money is still there accumulating wealth for you? I love that concept. Now, if you have a loan, it's critical that you pay it back. You would do it to the banking institution. Why not pay yourself back? Who recaptures the interest when you pay yourself back? You do. You recapture all of the interest just from paying yourself back. And now you're granting more. The grand scale of the millionaire concept is now being realized in your lifetime. So get those concepts. The tax benefit concept, tax-free money that you now have. I'm not talking about tax deferred. Traditionally, that's what we're taught. Tax deferred, 401ks, and all those other saving institutions that want to keep your money held hostage. And if you go to get it, naughty, because you're going to get penalized. I'm talking about being able to have access to your money now through the tax benefits, tax-free. And it's transferred to your heirs, tax-free. So, the general notion of plans of intention, which is a conception of the concepts that we're going to be talking about through the insurance cash flow concept. I thank you for your time, and please make sure you get the concept.
Albert Einstein once said that compound interest was the eighth wonder of the world, and it could be the one thing that has the most to do with your financial success or failure. A fundamental premise of compound interest is that it works best over time and without interruption. It's a concept, an idea, a way to look at how money works. It's a strategy designed to help you develop or improve your financial position by avoiding or minimizing unnecessary wealth transfers where possible and accumulate an increasing pool of capital you can access and you control. Some transfers are avoidable, others you can only minimize.
Wonderful. Oh, she did it. Oh, she did it. Oh. Live your blessed life.